Hey guys, Bill Soriano here from Pittsburgh, and today I wanted to make a little bit different video for you on something we haven't talked about in a while, which are supply and demand zones or supply and demand zone trading. And so, which is obviously in the smart money realm of things. It's something that years ago we used to focus on solely doing. Uh, Now you may have heard me say things like banker candles or order blocks. Supply and demand trading is essentially the same thing. You're trading from order blocks, but I like using supply and demand terms better because we know that an order block that we're selling from is a supply zone and an order block that we're buying from is a demand zone. So if I say this is a demand zone, you know right away that's an order block we're trying to buy from. And if I say supply zone, then you know that's an order block we're trying to sell from. Now, the last trading strategy I kind of taught you is this blue zone using the Fibonacci retracement. And this is still a good strategy to use for those of you that are using it. If you're having success with it, keep using it. Nothing wrong with it. Um, the reason why I want to start to reintroduce you to supply and demand zone trading is because you can get much better risk to reward trades using supply and demand zone method. With the blue zone, during my testing phase, it was good to get some 1 to 2 trades. I was able to get some 1 to 2 trades. A lot of trades though would have just been 1 to 1 trades, um, because we really weren't focusing on the supply and demand zone areas. We were taking trades prior to price actually hitting those areas. So many times, price would continue up into the supply and demand zone areas, and we would end up losing some trades, which is fine. But the win rate just wasn't what I needed. The win rate just didn't justify the lower risk to reward, or should I say, trying to just get a 1 to 1 or a 1 to 2. So if we understand that really, in the long run, we're probably going to win 40 to 45% of our trades at best, then we need to make more money on the trades that we win. And the supply and demand zone trading, um, that gives you a better risk to reward. So you'll be able to get 1 to 3s, 1 to 4s, 1 to 5s, 1 to 6s, even 1 to 10s. There's sometimes when you can even get more than that. That doesn't mean you have to keep the trade open for that long. It just means there's a possibility to get that, so you don't have to just hurry up and close your trade once you're up with a 2% gain. You know, so you can sometimes make 3, 4, 5, 6, up to $10 for every dollar you're risking when you're doing supply and demand zone trading. So let me just show you. That's the reason why I want to show you this. But again, I don't want to confuse people. So if you're doing the blue zone trading, you like it, just continue to use it. Nothing wrong with it. This is going to be more of a higher time frame zones that we're looking for on the supply and demand zone trading. So I'm just going to show you real fast. Go to the charts here. And this is AUD NZD. And the first thing you always have to do, we're on the 4 hour time frame. Okay. So we're going to check the trend on the 4 hour time frame. We're going to identify supply and demand zones on the 4 hour time frame. If we can't find a supply and demand zone that we like on the 4 hour, we can drop down to the 1 hour. But the goal is to find it on the 4 hour. And then once that demand zone or supply zone gets hit, we're going to drop down to the 15-minute for our confirmation or a lower time frame flip or a fractal confirmation, whatever you want to call it, to take the trade. Now, there are going to be some times where we don't have to drop down for confirmation. Okay. And this is, if you remember, extreme zones and decisional zones, right? So extreme zones are supply and demand zones that are at the top or the bottom of the move. And so since there's no lower areas below them, if you're buying, or no higher areas above them, no recent high areas above them, if you're selling, then many times you can set a buy or sell limit order at those areas and just get in the trade like that. And I'll show you a couple of them from last week that you could have seen. But the first thing you want to do here is look at the market structure. Now, AUD NZD is a little bit, and again, we took all the moving averages off. We still do have the Lux Algo Smart Money concepts on here. Again, if you're new, it helps you identify some changes of character, some break of structure. It also identifies the supply and demand zones for you. right? If you want to turn that on though, I have that one shut off because I want to be able to identify my own supply and demand zones. Sometimes I like to check once I find them just to see if Flux Algo agrees with me. But many times Flux Algo will give you supply and demand zones that don't meet these four criteria here. So this is very important. And so you have to be able to, filter those out yourself. Okay. Now I also have an imbalance detector on here for people that need help identifying imbalances. Okay. So we could turn that on. You can turn that on when you need to, and I can show you how we would use that. But for me, imbalances are easier to find, but for some people, they still need some training on that. So if we scroll out here, if we look at the recent structure here, right here we have this big move down here, right, which gives us a change of character right in through here because price was moving up, right? We had a change of character, then a break of structure here, right? As price moved up, and then price moved down here and took out this low that formed here, this swing low that formed right before price went to a new high. Okay, so that was the swing low. Once price broke this area here, right, to move to a new high, then that locks in this low here as your new swing low. And you can see price comes down and takes out that swing low. Now, when I say take out, we need the candles to close above or below the wicks in order to get a break of structure. Okay. So even, so like for instance, right here, the wick comes down below this low here, but it doesn't close there. So it gets rejected. And you can see price moves up for a while. Then it moves down, takes it out. So right here, we're in a downtrend. Okay. Now what happens is after this downtrend here, right, we come down, we make this low here. We have a high here. Price comes down, breaks structure again to the downside. Here's our swing high, either this one or this one right here. And it gets taken out. Okay. Gets taken out here. And you can see price moves up. Price moves up, breaks this structure right here. And then kind of consolidates. And then right here, we get a break of structure, a change of character to the downside. Okay. So it's kind of going up and down. This is just how you follow structure. Now, with some pairs, it'll be much easier to see. They'll be in a clear uptrend or a clear downtrend. This one here isn't. And so a lot of times when I see, like four change of characters in a row, without any break of structures, just like all, change of character, change of character, change of character, change of character. Price is just kind of going up and down, up and down. And so I'll skip that pair. But for this one, we get a change of character, then we do have a pullback and we get a break of structure. So that was kind of moving up. Then we got a change of character. And then we get another change of character to the upside, putting our bias bullish right now. So with the bullish bias from this move here to this move here, causing this change of character from this high right here, right? Price moves down, makes this new low, and that gives us this high right here. So we get this change of character here, or break of structure, whatever you want to call it. And then we have this area right here. So we're looking for a demand zone to buy from. So a demand zone is just a place where you have a big push up, and before that you have some indecision, right? You can see the indecision, all these indecision candles here. Indecision candles are candles that have big wicks on both sides and small bodies. They're just like consolidations, right? So like this candle here, for instance, on a lower time frame, what this did was this candle may have opened like right here, right? Maybe it tried to go higher here, up to here, and then lower. My tools never work here, so that's why I don't draw a line on the charts. But these are just consolidation candles, indecision. And then here's your big push right here. Now, the big push candle, the rules for these supply and demand zones, of course, this is a demand zone, and we're on the 4-hour chart, is we need to get a break of structure, okay, after the push. So there's the momentum candle right there, which gives us the push. And then here's our break of structure. Okay. So now you could say, well, Bill, this candle right here was a big momentum shift, and you could use maybe this area right here for a supply zone, right? A demand zone. But the problem is you don't have any imbalance. See? So if we turn on our imbalance tool, you can see you have no imbalance in here. The imbalance is right down here. So you want to pick the zone that has imbalance moving into it, right? Or moving away from it, right? In this case. So this big push up here, right, eventually causes a break of structure to the upside. And we have all this imbalance right here from this wick to this wick here. And you can see price comes down, fills some of the imbalance, but not all of it, right? Now we're also looking to make sure that area has not been already mitigated. So we don't have any wicks going down into this area already. It's unmitigated. It hasn't been touched yet since this break, since this impulsive move here, right? So sometimes you'll see an impulsive move up, then in the next candle will have some wicks going right down into that area. So that area is not, it's been mitigated at that point. So it's not, you need the area not to be mitigated. And then you need some kind of a liquidity grab. Liquidity grab's a little bit harder to find sometimes. It could be trend line liquidity. It can be equal highs and lows. There's a lot of different ways that you could see it. But right here, you could see all these wicks here that are kind of on one level. And then this wick here just kind of goes down a little bit lower and grabs the liquidity down here before price moves away. Okay. So you have a little bit of a liquidity grab. So this is a good area for us to say is a demand zone, right? It's a 4-hour demand zone. I don't usually mark them up if they're 4-hour, only if they're 1 hour so that I know. So this is our demand zone. We're using this candle right here. This is the indecision candle before the impulsive candle, right? Before the impulse up, okay, or the big move up. So that's where I want to draw my box here, right? I want to use that candle right there. Okay. Now, if we turn on the Lux Algo indicator, we'll see that Lux Algo is also giving us that area as well, right? But it's using this candle here because this candle goes a little bit lower. Okay. And that's why Lux Algo tends to use the candles where the wicks go the lowest or the highest, right? The lowest for the demand zones, the highest for the supply zones. Okay. I like this candle right prior to the impulsive candle. Whether it's up or down candle doesn't matter. Um, a lot of times we used to say the last down candle before the up move, so that would be this candle here. So however you decide to identify how to draw your supply and demand zones, just figure out how you want to do it and stick with it. Okay. And again, if all else fails, if you don't know what to do, then just turn the indicator on and it'll show you where to draw it. Okay. Now, this is what's called a decisional area because there's another area right down below here, right? Okay. So it's a decisional area, not a demand, right? I mean, not an extreme. So you have decisional zones and you have extreme zones. Now, the decisional zones, once price moves into them, you just can't set a buy limit here. Once price would hit this 4-hour demand zone, then we would drop down to the 15-minute and we would wait for our lower time frame flip or our fractal confirmation, whatever you want to call it, before we would decide to take a trade. Okay, because we're worried that this could just be an inducement area, right, to get us to take a trade. And it still could be even after our confirmation, but our confirmation gives us some added protection and some added confidence that it's safe to take the trade there. Okay, so we don't want to just set a buy limit at a decisional area. Okay, now I'll show you in the next example, I'll show you a extreme area where you can just set the limit order. So for here, we would wait for price to come into our 4-hour demand zone. Then we would drop down to the 15-minute, right? And we would wait for some kind of lower time frame flip, which looks kind of like this. Would wait to see price would obviously be down in here, so we'd be looking to see something like that, right? Where this structure over here is this, we have a change of character here where price is moving down, and then right, it's making that lower low, lower high, lower low, and then it makes the higher high that takes out this area there. And then we would identify a new demand zone on the 15-minute chart down here inside of our, hopefully inside of our 4-hour demand zone, but it doesn't necessarily have to be. Could be a little bit outside it. And then once price would come back to there, we would set our limit order there and hopefully wait for price to move up. So that's kind of what we're looking for there on the lower time frame, which would be the 15-minute. Now, if we were unable to identify a good 4-hour demand zone and we needed to drop down to the 1 hour to identify our demand zone, then once that demand zone would be hit, would drop down to the 5-minute to do this, the confirmation. Okay, but since we're on 4 hour here, we would drop down to 15-minute. So that's kind of what that looks like. Now let me show you again in the rules for supply and demand zone. You have that in, you need to first check the market structure, make sure you're trading with the current 4-hour bias, trend bias, right? Then after you have that market structure, you want to identify your supply or demand zone. You need that impulsive candle, that impulsive move that leads to a break of structure. There needs to be imbalance and not mitigated and liquidity grab, right? So those 4 rules apply for all supply and demand zones. If you don't have them, then you don't want to use that supply and demand zone. And if you can't find one on the 4-hour time frame, drop down to the 1 hour, assuming that the trend is still bullish on the 1 hour, then you would look for a demand zone there. Now, if on the 1 hour the trend seems to be bearish, then you would just skip that pair, obviously. And if you couldn't find a demand zone on either time frame, then you would just skip that pair as well. Right? Let's look at CAD shift for a second here. So let me just what's removed here. So again, we're on the 4-hour time frame. We could see that our last, our last really, what this is showing us here, our last move up here, here's our low, right? And here's our high. So this is our swing low, this is our swing high. This puts us in an uptrend. The indicator is showing us a change of character here. And then this move back down here does not take out this low here. But in either rate, what we want to do is we want to pull this back some anyway, just to show you something. So right here, you have the change of character, you have your high. And so what you're doing is you're looking for a, you're looking for your demand zone to trade from. And so when you're looking at this area right here, right, you could see the impulse will move up. We have some imbalance, but that imbalance has been filled. Okay. So if we drop down here, this area I don't like. Okay. I don't like it because it does lead to a break of structure eventually, right? But there's no imbalance. Let's see, there's no imbalance, and there's there is a liquidity grab because you have trend line liquidity right here that gets broken on the impulse candle, but we don't have the imbalance. So if we go down to this area here, we see that we have imbalance from here to here. So let's turn on the imbalance detector here just for the heck of it. Okay, so down here you can see imbalance. This imbalance here was here initially, see, but then when price came down, it fills that imbalance out. The indicator, however, stays on to show you that area, okay? But you have to be able to see here that this imbalance has been filled, okay? So I'm going to find a better indicator for you guys to use. This is just called imbalance detector, LuxElgo. But this area here should disappear once that imbalance is filled. So it may be in the settings, I don't know. But you have to be able to see that yourself anyway, like I said. So here's the candle right prior to that. And if we turn on our LuxElgo Smart Money, right, it's giving us an area further over there. kind of like this area right here. Okay, so just see some, what was I trying to do here? Okay, so let's just kind of play this forward to see what happens here, just so I could show you. I might have hit it there by mistake. So we're waiting for price to hit our 4-hour area. And real quick, let me show you that this area here, if we scroll to the left, you see how we don't see anything uh, quite some time here that's lower. Okay. Now, there is a lower area back here, but that's pretty far back. And there's also no imbalance in this. This imbalance is all closed up. This price action is efficient. It's not inefficient. There's no imbalance. So I'm not really concerned about that area. And since it's so far back, I'm going to consider this an extreme zone. So for me, this would be a 4-hour extreme demand zone. Right? And since it's an extreme zone, that means that we could we can just set a limit order right here, right? And our stop loss or our invalidation area would go down below the demand zone, right? And then we could target this high here. And so this is why I was telling you at the beginning of the video, we need to get better risk to reward ratios. This risk to reward ratio right here is almost a 1-to-7. Okay. And all we're doing is we're targeting this high. Okay. We're just targeting the high. And that's the high that's formed before price comes back to this area. Okay. So let me just show you how this works out here. Actually goes higher, right? We'll make it a little bit higher. The price is now working its way back down, right? Okay, and then right there, okay, right here we get tapped in, right? So right here, see how price works its way down, price comes down, and our buy limit order goes off. And then what happens after that, right? Price makes a big move up, and that's currently what we're looking at right now. Now, with such high risk to reward ratios, normally what we do is, as you know, we normally set like a 1-to-2 risk to reward, and we just exit the trade once we hit that 1-to-2. Right? Or sometimes we try for a 1-to-2.5, or sometimes even a 1-to-3, right? Using the other strategies, and we just leave that run. So we either lose our 1% or the trade goes and we get out at the 1-to-2, 1-to-2.5, 1-to-3. Now, with these bigger risk to reward ratios, since they're so big, if this is a 1-to-8, when you're up half of that or a 1-to-4, you may decide to close half your position and move your stop loss to break even and then just let it run all the way to the top there. Now, it hasn't quite reached the top yet. It may do that today when the market's open, or it may come back down here. But this was one of those trades that would have a high risk to reward ratio. And since it's an extreme zone, since you're trading from an extreme zone, extreme demand zone, you can just set the limit order there and you don't need to wait for the lower time frame confirmation. Okay. So I think another one that we had here. So this is one in EURGBP. So let me just remove my drawings. I thought I had the drawings removed here. So looking at the market structure, you can see our last move up is bullish here. The indicator is giving us this breakup structure, all this stuff here. We have this giant impulse candle here, and we have all this imbalance, right? In here, this is our indecisive candle with the wicks here, right? Now, the thing is, you have this liquidity grab here, right? And this breakup structure. So everything's there you need to have a valid demand zone, right? And again, it's a demand zone because it's an order block that we're buying from. It's at the bottom of the charts, right? It's at the bottom, not at the top of the move. So let's say you identified that candle there as your area, right? Let's just turn on Lux Algo. Lux Algo likes that area as well. See? Uh, and it actually likes, it looks like it likes, let me see something here. It likes the same candle also, right? So I made my zone a little bit bigger, but let's just do this. Let's make this a little bit bigger here so you can see it. The bottom can move up a little bit. So this is what our demand zone looks like. Now, this demand zone is a decisional area because you could see over here to the left, we have a lower area right here, right? And so that's pretty close. Okay, so remember in the last example, we had like 4 or 5 areas that weren't lower. So we were using that as extreme zone. Now this area here is pretty close. And there's just a little bit of imbalance right here. So I don't know if you could see it from that wick. You look at your momentum candle and you go back one candle to the left and you look where that wick is. So you could see that little bit of imbalance from this wick to this wick here. So there's just a tad of imbalance. You could see it if you turn the detector on right there. Okay, so there's a little bit of imbalance there. And since there's a little bit of imbalance there, it's possible that price will be attracted to that, right? Okay. So this could be this could be an inducement area for us. Now we also have this area right here that there's no imbalance there. See, you have this impulsive move up, okay? And here's your candle right here. You could see that wick. There's really no imbalance there. Now, if we turn on the detector, right, it's showing you the imbalance from here to here, but this wick comes down and fills it. Again, we need a better, I got to find a better imbalance detector for you because once that imbalance is filled, then that area should disappear so that you're not, tricked into thinking there's imbalance there. There's really no imbalance there, but there is some imbalance down here. And because there is that little bit of imbalance down here, and this would be the extreme area down here. So we could see here price came down and it moved into our demand zone. But again, since this is a decisional area, this is a decisional demand zone, we did not set a buy limit order there. Now, of course, it would have worked out if we did, but we didn't know that, right? Hindsight's always 2020. So once price comes down into that area, what you want to do is you want to drop down to the 15-minute chart. Okay, and if I could just see if I could put this on replay and just kind of go back here. Okay, so right here we could see price comes down into our 4-hour demand zone. Now we're on the 15-minute time frame. And we could see price is moving down, right? It has this lower high, lower low, lower high, a lower low, right? The lower high right here. And then price moves down in the zone, comes to here, comes to here. And then it says there's a change of character right here. Okay, now to me, I would think that, see, this is where the Lux Algo indicator sometimes, I would think that you need the change of character to be right here on this wick. In any event, this candle right here, I run that across there. This candle right here does break and close above there. So right there, you definitely have a change of character. So with that in mind now, once you have a change of character, you can identify a demand zone on the 15-minute, a refined demand zone to trade from. And since it's a refined zone, you can even get higher risk to reward ratios if you choose to, okay? And I'll show you what I mean here in a second. So let's look at some of these areas here. So here's an area right here. We have an impulsive move up and we have some imbalance, okay? So this area right here would be a good area that we could trade from, right? We have this impulsive candle up. We have imbalance, right? Now, if we go down below here, right, we don't really have an impulsive candle and we don't have any imbalance, okay? Now, if we look further down the zone here, again, there's an impulsive candle here, but there's really no imbalance down here. There's no improper price action. This price action here is all efficient. So there's no inefficient price action. Everything's closed up here. Okay. Even right here, you see how you had an impulse right here. This candle came down, filled it all. So really, where your area to trade from is right here. Now, here's where I'm saying you could have very low risk to reward. Some people may just highlight that area there. I would go all the way down to this low. Okay. So what that's saying to me is I could take a trade right there. I could set my buy limit on here, and this is my 15-minute demand zone, right? This is my refined demand zone, okay? And because I have a refined demand zone now, right, I could set a trade here. And my stop loss would just go down right below this low. I don't have to go all the way down to here. That's my 4-hour zone. Here, my stop loss goes right below this low. So you can see right here, we get tapped into this trade. Now, what are you going to target over here for your high? You're probably going to target this, if you target this, okay, I got this going the wrong way, sorry. This is a buy. This is a buy limit right here. Stop loss goes below the low here. If we target this first high here, that's just a 1 to 2. So we're probably going to target this high right here. Try to get like a 1 to 3.5 out of this trade. And you can see what happens is price makes a nice move up. And then it kind of comes down and consolidates right now over the weekend. Now what happens is because you get this break of structure to the upside, you now have another area possibly that you could trade from, right? But just in case you missed this one, or if you wanted to add on to your position. Okay, but what we could see here is the problem is we don't have any imbalance, right? So we have this potential supply zone down here, this new one on the 15-minute time frame. Okay, we have an impulsive candle, but we have no imbalances, right? There's no imbalance, so there's no place you can really get into a trade there. Okay, so you would have to wait for another break of structure to the upside and maybe look for a continuation trade, right? Or, if price would just decide to move down, take out these lows, then we would lose that trade, but just 1%. And we would look to then look for a supply zone instead of a demand zone to sell from. So I just wanted to make a quick video for you today just to kind of refresh you on this supply and demand zone thing. If you have any questions on it, drop me a note. I can send you some better videos to explain it to you. Our community really doesn't focus on this so much anymore. We focus on the impulse scanner and the indicators, our proprietary indicators, which is a very good way to trade. It's a much easier way to trade. You don't have to, kind of look for the trend and all this stuff because the impulse takes care of everything for you. And then all you have to do is wait for the indicator to go off. So we found that our customers like a much faster way to do it. But if you're interested in supply and demand zone trading, you want more information, just get in touch with me. And I'll be making some more videos over the next couple months doing this method. I'll be showing you some trade examples as well, and showing you how to use this. But if you need more information, let me know.